Hey everyone, how are you doing today? Hope you're doing well. So do me a favor before we get started. I need for you to hit this like button. If you're not a subscriber, I need for you to do me a favor and hit the subscribe button and notification bell next to it so that you will not miss an episode. Also, check me out on IG. My IG page is elevation_mentor. So, how is everyone today? How are you doing today? Hope you are doing well, everyone. So, today we're going to talk about the housing market. In particular, we're going to talk about PMI and what is PMI. So, this is just a refresher. So, PMI is private mortgage insurance. So, according to an article that I'm reading, 27.5% of loans were conventional from the year 2020 to 2022. So, they keep track of all that. They keep track of the percentages of the types of loans that people take out. So what is PMI anyway? So PMI, it protects the lender in case you default on the loan. So this is extra money that you get charged every month, and it's called private mortgage insurance. So you're paying extra amount of money every month, and it protects the lender in case you default on the loan. So, private mortgage insurance is given to people who put down less than 20% on a home. So, if you put down less than 20%, then they tack on this PMI. And so you'll see this in the mortgage. It's included in the mortgage. And so, how much is PMI out of curiosity? PMI is anywhere from 0.22% to 2.25% of the loan. So to break this down into real numbers, let's say that you got how much you want to make this house worth? 100,000, 186,000. We're going to do a calculation here. So do you want to do a $100,000 house or $186,000 house or a $300,000 house? Any Okay, so we will go with $186,000 house. Let's do that. $186,000 house. So they're going to charge 0.22% to 2.25% of the loan. So say you start out with this $186,000 house that you see that you like. All right. By the way, to get into this house, if I have any first time home buyers watching me, you're not in a home yet, but you're planning to get a home, um, you can actually get into this home for 3.5% of this. So um, this is not something that you can't do. This is doable, right? So if you have never owned the home before, let's see just for calculations. Okay, let's do this. So say you got your eyes on the house and you haven't owned the home before because you're a first time home buyer. So 3.5%, multiply this by 0.035. This is what you need to get into that house. All right. First time home buyers. Alrighty. So back to PMI. PMI is 0.22% to 2.25%. Oh, by the way, if you're a veteran, veterans can get in with no down payment. So check that out. Check out the VA loan if you are a veteran. Also check out NECA, NACA. All right, so back to PMI, 186,000. They charge 0.22% to 2.25%. So 0.22% is $409 per year that they're adding to your monthly payment. Divide that by 12. That's an extra $34 on your mortgage payment. So that's the low end. The high end they could charge is 2.25%. So say you get your eyes on this $186,000 house, 2.25%, multiply that by 0.0225. So this is how much they're charging per year. Divide that in by 12. That's $348 tacked on to the monthly payment. So it could be anywhere from the $34 a month extra payment to the $348 a month extra payment. So either way it goes, you see that PMI is the extra payment that they're tacking on to your monthly payment to protect the lender in case you default on the loan. So how do you get rid of this PMI? How do you get rid of the PMI? Well, the PMI is automatically removed by the lender once you hit 78% LTV, loan to value ratio. Once you hit 78%. So say, for example, do you want to do a $100,000 house or a $186,000 house? Let's do a $100,000 house. So you got this $100,000 house. Once you hit 78%, the PMI is automatically removed. So multiply that by 7.78. So once your mortgage goes from, the loan balance goes from 100,000, and once you get it down to 78,000 in this example, the PMI automatically goes away by the lender. So once you get it down to 78% LTV, that's when the lender automatically removes it. All right. Also, once you get past that half point, it's also removed, even if you have not hit that target. So say you have a 30-year mortgage and now it's 15 years. If you're at the 15-year point, then the lender automatically removes it at that point. All right. So either reaching 78% LTV or you're at that halfway point, even if you have not reached the 70% LTV. So there are ways to get rid of private mortgage insurance early. You can ask the lender once you get to 80%. You can ask the lender. The stipulations that they have is that you would have to ask in writing. The request has to be in writing. All your payments have to be current. No equity loan or line of credit on it. And then evidence through an appraisal that the home has not lost value. That's how you would get rid of it early if you were interested in going that path. A different path is to have the home appraised and to see that it's appraised for a higher value. And by it reaching that higher value, it has reached that equity number that they're looking for. That is the other way, through appreciation of the home. That is another way to cancel PMI early. Another way is to pay it down earlier, because again, they're looking for these specific numbers of paying it down to 78%. So paying it down earlier, that's another way to get rid of it earlier. Another way to get rid of it earlier is refinancing. Of course, refinancing is not advisable right now because the rates are so high. Also, you're going to have additional closing costs with refinancing. So that's not advisable. However, it is mentioned as another way to get rid of PMI earlier. All right. So this is the world of real estate, PMI. And so you can see now what they're doing with the PMI. They have this number that they have that they want you to get to, which is 78% of that original loan value before the PMI is removed. So what you could do is once you get down to that 78%, get on the phone and call the lender and make sure that they removed it. So it is supposed to be automatically removed. But you could get on the phone and make sure that they actually removed it. Something that you will notice is if the PMI is removed, your mortgage payments are supposed to be lower. But what you may notice is the mortgage payments may be lower, but some kind of way they found a way to increase taxes. And you know what taxes do? Taxes raise that mortgage right back up. All right, so this is PMI, the world of real estate, private mortgage insurance, something to keep in mind. All right, so for everyone who is watching, if you are not in the stock market and you're interested in learning how to invest, check out the link below and join the wait list for the investing group. Also, feel free to leave a comment. Let me know your thoughts. Let me know anything that you would like to see in the future. Also, check out my hat collection below while you are there. Check out the pin link. All right, so thank you for watching, everyone. Have a good rest of your day. And if you got any value from this video, hit that like button. All right, thanks for watching. Have a good rest of your day. Bye for now.